Hey, everybody, it's Matt Bowles here. Welcome to the webinar. We have got a good one for you tonight. Let's just start off with a couple housekeeping items, though. On the right-hand side of your screen, you're going to see a chat box. That is how you're going to be able to communicate with us throughout the webinar. You can just type into that chat box, and I'm going to be able to see that, and that's how you're going to be able to communicate with us throughout the webinar. We're going to take most of the questions at the end of the webinar, though. And so definitely, as we're going through, we're probably going to cover a lot of your questions. We also might raise some questions for you as well. So be sure to jot those down, and then we're going to have your opportunity to get all of those answered live at the end of the webinar. So at the very beginning here, I just want to do a little bit of intro in terms of who Maverick is and what we are all about. I also want to encourage people to feel free to type into the chat box. Let me know where you're tuning in from tonight. And if this is your first Maverick webinar, or if you've been with us on some of our previous Maverick webinars, and just let me know where you're tuning in from tonight. Go ahead and type that into the chat box. I'll be able to see that directly. And for people that are new tonight, I'll just take a couple minutes, give you a little bit of background on Maverick Investor Group. I am one of the co-founders. We have been featured in a lot of the different real estate investing press over the years. And basically what we do is we have focused in on one niche specialty, which is helping you to buy turnkey rental properties in the most investor advantaged U.S. real estate markets, regardless of where you happen to live, right? And so in doing that, we call it the Maverick approach, right? Helping you to use rental properties to accelerate your wealth building velocity so that you can design your dream lifestyle, right? Because that's why we're all here in the first place, right? And we do that by helping you to buy turnkey properties in the best U.S. markets. Now, part of what we do in terms of that is we actually get you access to the specific properties in the market so you can buy them. But another piece of what we do is we bring you educational information, access to other experts that are going to help you along your investing journey, right? So it could be tax professionals or asset protection specialists, or in the case of tonight, property management experts, because that is one of the most important, key, crucial linchpins to successful real estate investing is, of course, the property management component, right? The first part of it is selecting the right market. Then it's selecting the right property and doing all your due diligence on that property and everything else. And then once you close, from there on out, it's really very much about the property management, right? And so that's one of the things that we get the most questions on. And so I wanted to bring you an event tonight and bring you an expert tonight who's going to be able to really break down what's important for you in terms of evaluating and selecting a property management company. So with that, I want to introduce our guest tonight, who is Kevin Ortner. He's the CEO of Renters Warehouse, which offers a full service property management platform. And they address all the needs of out-of-state real estate investors, from tenant placement to property management, analytics, reporting. They operate in 40 plus different U.S. markets. They manage over 15,000 residential homes for 12,000 investors. They have $4 billion worth of real estate currently under management. Kevin, welcome to the webinar, man.
Well, thanks for having me on tonight. I'm excited to be hanging with you tonight and your great clients. And it's always a good night when we be talking real estate investing for sure.
Well, I want to give folks a little bit of background too. You and I have known each other for 17 years. We actually started our businesses in the exact same year. We both started our businesses in 2007. We were helping people to buy turnkey rental properties. You came in and decided to basically disrupt the property management industry. And over the years, we've known each other. You've built your company, you've grown it, you're in 40 markets now, and you have all of this years of experience. And so you are the person that knows more about property management than anybody that I know. And so that's why I wanted to have you come on. And I think the way that I'd like you to think about or approach this tonight is, with all of your experience, both building your own company, but also seeing what else is out there that you are contrasting your company to. If you, Kevin, were to buy a rental property for yourself, for your personal portfolio, and you were buying that property in a market where Renters Warehouse does not operate, and you do not know any other property managers in that market, and you had to go from scratch and start vetting property management companies that you knew nothing about to select one of them to manage your personal property, what would be, knowing everything that you now know about the property management industry, what would be your approach to doing that? And how would you evaluate the management companies? How would you evaluate the property management agreements? What would you look for in the fine print? How would you assess their fee structure and what the actual net cost to you over time would be from working with a property management company beyond just the monthly percentage of the gross rent that they charge? Things of that nature. That's what I want you really to sort of bring to the table tonight. And so with that, I want to turn it over to you and let you sort of take the lead on that. And I will be here and I can ask some follow-up questions as well as we go along, and we can kind of dialogue it a little bit. But I want to let you take the lead and sort of talk people through that process.
Well, that sounds great. How much time do we have? I guess is number one. And that's a great topic. And look, I do that. And so besides having helped build Renters Warehouse for the past 17 years or longer now, as you mentioned, I'm a real estate investor, right? I invest in single family rental homes across the United States. Now I buy my homes in markets where we happen to have a Renters Warehouse, but I am on the other side of this as well as an investor, as an owner, and have taken different strategies to how to grow my portfolio over time, just like I think everyone that's here on the webinar tonight with us. And I think understanding how it is that you're going to build your portfolio over time, understanding what your investment goals really are, and your philosophy for real estate investing is the cornerstone to figuring all this out, which is why we start here on understanding your needs and goals from, the types of homes you're going to buy, the locations you want to buy them in. But ultimately, it comes down to how much time do you have for this, right? There's some investors, and I'm sure there's some listening and watching now that want to be a little bit more hands-on, want to know more of what's happening at their property and maybe be involved in some decisions. And then there's a whole other group of people who want to buy the asset and have true passive income, hire a property management company to make the right smart choices for them, and watch that property appreciate in value over time and get some income in their bank account at the same time. And those are two very different spectrums, right? And I think that's why I'm assuming a lot of folks here found this through the Maverick Investor Group network, because they've realized that, it's really, really hard to go find a wholesale property today and understand the risk that's going to go in with renovating and rehabbing that home, and then putting a tenant in place and then getting it to a stabilized asset where, you can skip a lot of that work working with you guys at Maverick and buy turnkey, renovated, beautiful rental homes in great markets, as I like how you call them, investor advantaged markets, I think is what you call them, right?
Yep.
And so that's great. And, the reason I go on that so much is finding the right partners for your investment strategy is so key. And so it starts with Maverick Investment Group being able to buy a turnkey home that's been professionally renovated and ready to go. And then how much work do you want to do in property management? And every property manager out there, and by the way, there's like 60,000 property management firms for single family rental properties across the United States, huge number. Right? Because sometimes this is someone's side gig when they're a real estate agent. Sometimes they're just a hobby real estate investor that started doing third-party management services for some others, small mom and pop shops, larger national firms like Renters Warehouse and some others out there. And they all offer different types of services. They all offer, different flexibility on how involved you can be in the decision-making process. And I think that's what's unique to what we've built at Renters Warehouse is we have a little bit of flexibility in there to say, okay, you want to be involved in these aspects of managing your home and making these decisions. we can do that. We can accommodate that all the way to the folks who want nothing to do with anything. We're going to take care of it front to back without really involving you unless there's something major happening at the home. And so that's really the first thing you need to be thinking about is your overall overarching strategy. How involved you want to be in the process, and that's going to start leading you to ask the right questions of the property managers that you're interviewing in these markets when you're doing so.
Let me throw up a poll at this point, and let me just ask folks that are here, how many people own at least one out-of-state rental property? Because I feel like when you own out-of-state, the property management component becomes even more important and significant, as does the vetting process and the due diligence on the management company. So feel free to chime in there and let us know if you already own at least one out-of-state rental property. And some folks already have a portfolio. A lot of our clients are building those portfolios and they're diversifying them across markets. And some folks are here and they're checking out the educational stuff first to get educated about what they should do before they buy their first rental property. And that is fantastic too. You're definitely both in the right place for this webinar, I would say. So we'll let you go ahead and type in your answer there to the poll. And Kevin, I'll let you continue on.
Yeah, that's great. I'm just watching some answers come in here on the poll as we speak. And it's fun to see where everyone's experience is that's watching here today. And you're right, Matt, being out of state, away from your home changes maybe your perspective on how involved you can be moving forward. So, what we have next here is of course, really basic stuff you want to be looking for, but it's amazing how often this is overlooked, right? For when you and I got started in this business in 2007, in most states across the United States, property managers didn't have to be licensed real estate professionals. That changed pretty rapidly between 2010 and call it 2013, where in most states you needed to be licensed to do this type of activity. So that's certainly one of the basic questions you want to be looking into. That's easy to find out. One, of course, you can ask if a broker is truly a broker and following the state regulations. They're going to have that information listed on the website. You can also check the state real estate office and understand if people you're working with are truly licensed. That means that they have increased responsibility to you as the client, fiduciary responsibility to be acting in your best interest. And of course, they've gone through education to make sure that, that they know what they're doing out there. So ensuring that they have the proper licensing and certifications. How long have they been in the business? This isn't necessarily something where you say, okay, how long have you been doing this? Or how long has your business been in operation? Because there could be some great smaller boutique property management companies out there that are formed from people who have been working in the property management industry for a long time. So it's really about the people you're working with at this company besides just the company itself, right? The other big thing is the types of properties that people manage. This seems obvious, but oftentimes it's not asked, right? There's a big difference between big multifamily apartment property management and single family rental property management. And frankly, now today, there's this blurred line between vacation rentals, short-term rentals, and long-term rentals, right? Some of the companies are starting to get into doing both. We don't do any short-term stuff. We're 100% long-term focused on the 15,000 plus homes that we manage across the country. It's just different. When you're in short-term, you're running a hotel, right? Checking people in and out, inventory management, churning and burning through folks. The tenant selection process is different if there is one at all. And so understanding the types of properties that are being managed by that company and the type of experience that company has are some of the basic places where you should start.
One of the things I would add to that to go one more granular level down, Kevin, is certainly those macro categories are important, right? Is the super majority of their business in residential? Is it in long-term rentals as opposed to short-term vacation rentals, et cetera? But then what I encourage people to do is say, how many properties are they managing at a more granular level in terms of like your specific area of the city, your specific price point? Are they primarily managing $150,000 properties, or are they primarily managing $1 million properties and luxury condos and that kind of stuff, right? And so what I encourage folks to do is, listen, if you're considering, one or two or three of these properties and they're all in kind of a particular area or a particular price point, see if the property management company specializes in that price point, right? If you're buying Section 8 property, for example, do they specialize and have a lot of properties that they do Section 8 rentals with? Or is yours going to be one of the only ones in their portfolio, right? And so those more nuanced areas of expertise I find are also important to ask about. Would you agree?
Yeah, that's a really good point. There's a huge difference between executive rentals, right? Your $500,000, $750,000, $1 million home that might be for relocation of Fortune 500 company executive coming in town for a couple of years, and the average single-family rental property across the country, or the Section 8 type rental where there's housing assistance involved, especially when you get down to that Section 8, because there's tremendous amounts more regulations, rules, hurdles to jump through. And Section 8 can be wonderful investments if you have the right partner, to your point, the right partner in your property manager that understands how to work with within the Section 8 rules, and preferably has personal relationships with the inspectors that are doing Section 8 inspections, with the folks who are writing the checks for the rent for Section 8, because look, they can get hung up for really simple things, basic things, right? Every year, there's a Section 8 rental inspection to ensure that your house qualifies, that your rental property qualifies to be a Section 8 rental. And if something's brought up on that inspection and not fixed promptly, they're going to withhold rent. And if it's not fixed after that, promptly, you may never see that rent again, right? So those delays are imperative, and having the open line of communication. So I think you're right when you talk about the types of properties managed besides the actual kind of high level macro type, multifamily, single family, short-term, long-term, but where they're located, the price point of those homes, the average rent of those homes. And I think specifically, if you have a Section 8 strategy inside of your investment strategy, working with a firm that has significant Section 8 experience is just going to make your life so much easier, because again, they've probably formed those relationships. I know my team in our markets where we do a lot of Section 8 work, our property managers on the ground in those local markets have like first name relationships with the folks that are making really important, impactful decisions to making sure that you can continue to get your rent, and you have great tenants in place in your home while you're doing it.
Awesome. And then, talk a little bit more about the background checks and the insurance coverage that people should be asking about.
Yeah, look, background checks. Look, it's this is becoming more and more important in today's world. Simply, are you performing background checks on your property managers, on your leasing agents that are going to be in my home, showing my home, checking it on my residents, and doing the property inspections and those kind of things that we'll talk about the key services and responsibilities of property manager, I think, coming up next. But this is important because you don't want to have added liability put on you because something happens with your property manager, right? They hire a felon, heaven forbid, and they're going into these homes doing inspections and causing problems or something like that. So just understanding what the screening criteria is as they're hiring people to be working on your home. Hopefully any legitimate business that's out there is doing this and ensuring that they're hiring quality people who are going to be honest, trustworthy, and looking after you and the resident inside your property. But that certainly can come back on you as a property owner if you're not careful. And that parlays right there into insurance coverage. What kind of insurance coverage does the business have? Right now, most property managers are going to make sure that you have insurance on your home, just like a lender would. Most property managers are likely going to ask to be named as an additional insured on your homeowner's policy. That's going to cover both you then and your property manager. If there's a slip and fall at your home and there's a claim brought against the property, essentially that insurance company fights for both you and the manager. So there's insurance requirements, of course, needed for the investor on the home, which are pretty standard. But on top of that, does the property manager have general liability insurance? What are the limits on that policy? Are they, if there is an issue that goes above and beyond your homeowner's policy or something that your manager's at fault for, is their insurance going to step in and make sure that they protect you as well? So general liability is really a big and very common one that all property managers should have, but they should also have what's called E&O, or errors and omissions, a policy where this is going to cover mistakes that they might make, whether it's a rent collection error or a lease error. If they end up signing a lease that's inaccurate or improper, and it could cost you a lot. Let's say they left a one off of the $1,900 a month rent, or one off the $1,200 a month rent, and all of a sudden it got through and the tenant has a lease for $200 a month. That's a legally binding lease if no one caught the mistake. That's where something like an errors and omissions policy would come in play to make you whole as the investor and the client in this case there. So those are the big two you want to look for and understand how, what requirements are going to have of you as the investor and as the client on your insurance, and just understand that it all works together and you're going to be covered, heaven forbid something happens. So this next section, we talked a little bit about a couple of these already, right? From rent collection and inspections, but you wouldn't think that this is something you really need to look at when you're hiring a property manager, because you might just hear like, hey, property manager, they're going to take care of everything that I possibly need. But, more and more common today, we're running into technology-enabled solutions for property management that cover maybe one or two or three of these things, but not all of them. And if you're investing in out-of-state property and you're looking for an out-of-state property manager, you really need a partner there that's going to handle every piece of the puzzle along the way, right? So we have listed here rent collection and accounting, maintenance, leasing, and eviction processing. These are really the cornerstones of what makes a good property manager. And you should dig into every one of these areas and understand what their process really is. In fact, if you're interviewing multiple firms, a great way to understand how they run their business and how they're going to communicate with you through all of these is to, get a process. You should be able to ask your property manager, hey, what's your rent collection process? Can you send me a flow chart, right? Because there's a cadence to how to collect rent. Now, hopefully, if you're starting with box 4 there, leasing and tenant placement, and your property manager is placing good tenants into your home, rent collection is really, really easy, right? This is where alignment is built between property managers and investors. Is we all want good residents, because the better tenant we place, the easier the whole thing goes along the way. However, people slide by, circumstances change. And when that rent isn't paid on time, what's the process to collect it? Is it haphazard? Is it one person sitting on the phone calling and hopefully they don't forget? One of the things that we've done at Renters Warehouse, which I'm a little biased here, but I'm a big proponent of, is departmentalizing our business versus a portfolio management approach. So I'll explain the difference. A portfolio property manager is going to be, a really great responsible person like Matt. Hire Matt on and say, Matt, you're going to handle these 80 houses, 75 houses, 100 homes, whatever the ratio might be. You're managing these homes. And by the way, you're going to lease the homes. You're going to collect rent, make sure it's coming in. If it's not, you're going to coordinate maintenance and repairs. You're probably not going to do accounting. They probably have a back office for that, but you're going to do a lot of these things. And the tenants are going to call you with every issue. And while that sounds great from a resident experience perspective, because the person in your home is going to know who to call, and frankly, it might sound great from an investor experience, because you always know you're going to call Matt with every question you have. The problem is when you manage homes in that way, oftentimes what can happen is you can forget things, right? You're getting busy. So yeah, it's the 6th, 7th of the month coming up right now, right? Busy rent collection time as we're recording this. And Matt's got some emergency maintenance items going on, or he's really busy leasing homes. Like, is he going to get to be able to collect that rent? So what we've done is we've made a specific department for each one of these boxes and more in our business, where we have a group of people that all they do all day, every day, all day long is collect rent. And believe it or not, you can actually find people out there in the world who love collecting rent, right? If you can hire people that have the specific skill sets you're looking for, the specific personality, communication skills for any one of these functions, that's the best way to go about it. So we've built a rent collection team, and they know when they come into the office, they pull up their screen, they see who hasn't paid, they understand who they've talked to, what payment plans might be in place, and they're staying on top of it so you don't forget. So that's really, really important. So number one, rent collection. What's the process for it? Those are some things to look for there. Of, do you have dedicated folk collecting rent, or is the same person who's leasing my house that gets paid probably a lot more to lease a home than to collect rent, also trying to collect the rent, and are they going to prioritize it? So rent collection, big service there. Obviously, that's the first one that comes to mind for people because that's where the revenue comes from on these homes. But you want to make sure you've got someone who's really, really solid at this and has a great process in place for this.
Let me ask you this, Kevin. Again, if you were the one doing the interviewing and you were interviewing property management companies, when you got to the point of that interview where you were asking them about the vacancy rate of their portfolio and the eviction rate of the tenants that they place and go through all their qualifications, how many of them end up getting evicted? What type of answer should people look for in terms of vacancy rates, eviction rates? What are sort of an industry average or standard that would be acceptable to you as an investor?
Yeah, look, that'll vary a little bit by location, depending on where you are in the country. But look, you want to have an occupancy rate of 95% plus in most markets across the country. Stabilized occupancy rate, meaning homes that are ready to rent. 95% of them are rented. That's obviously occupancy rate. So 95%, 94 is acceptable. Again, depending on the market that you're in. So part of that is maybe exploring and trying to pull some local market intel and data, which I know you guys have a ton of that, right? We can be a resource for that for any of your clients as well. Even if we're not in that market, we often know what some great KPIs in those markets should be, so we can provide that. But as a whole, if we're talking, really high level, 94, 95% occupancy, eviction rate should be less than 1%. And then rent collection, right? You want to know what's the delinquency rate, and right now, the way things are today, you're probably going to be looking at, 2 to 3% is average. Anything above that's good. So those are the types of numbers you want to be chasing from occupancy and rent collection. But again, this can really change depending on the market you're in, right? For instance, right now, in a couple markets across the country, Atlanta, Georgia is one that comes. They're still behind on processing evictions from COVID, supposedly. And so it's just like it takes forever. It never used to, but there's certain cities now that just have a really long process to get people evicted. And so that, has a dent on some occupancy levels of performing homes and that kind of stuff. But as a whole, I think those are the KPIs I'd be looking for.
Can you also talk about tenant placement criteria and qualifications in terms of vetting a property management company, asking them what standards do you use to qualify a tenant that would then subsequently occupy my property? What should people be looking for when they're asking about those kind of questions?
Yeah. And again, this is going to be a little bit dependent on the type of home you have, right? We talked affordable housing, Section 8, a little bit lower criteria becoming in there, obviously, income requirements, things like that. Whereas maybe if you have a higher end rental, that's obviously going to be different. And this is actually a great question to ask a property manager, and certainly something I would be asking in the market I'm in is can I give input on the criteria of the type of profile of renter I want in my house? Maybe half of property managers across the United States will say, no, we've got like our box. This is what we do, and this is what we fit. And frankly, they do it for simplicity's sake, and they do it to stay away from any fair housing complaints or issues that come up. So there's good reason for it. We actually have some flexibility built in for our clients where if they say, hey, you know what, I actually want to have a higher credit score than maybe your, standard box. And I'll get back to your standard question here in a minute. That's okay with us, but we have to do a lot of coaching in that to say, all right, if we're going to set your credit that you want for your home at 700, which is really high for a rental home, that means we can't make an exception later because we find a great applicant that has high income at a 680, because you're going to run into all sorts of issues of why did you reject this other person with a 680 when you accepted someone later with a 680? And so you get into a lot of complications around fair housing rules and make sure there's no discrimination happening, all that kind of stuff. So there's a lot of firms out there that'll say, this is what the box is. We're going to find a tenant based on this box and move them into your property. You have no say. Some investors want to say, I'd like to know a little bit more about the people moving in my house. I want to have some approval around it. And again, so long as it's in the guise of not the guise within the guidelines of fair housing, that's okay to do. And so that's where one of those pieces of how much do you like to be involved and what's your philosophy around owning these homes, even if you're not local, but you want to be understanding more about what's happening to your property. That's a really key question to ask. If I was going to go to a firm and they said, hey, we have a standard criteria for screening tenants. If it passes this, we're going to move them in. That's not a bad answer, but you want to understand that, of course, what is it? So let's start at the high level, right? What are they actually looking at when they're screening tenants? Is it, it should be wide, meaning we do income verification, of course. You want to have a minimum of 3 times income to rent. So if the rent is $1,000 for easy math, you want to have a $3,000 monthly income for the tenant or tenants combined that are moving into your home. So income, but not just what is it and what do they write down in the application, but are we verifying that through pay stubs, through talking with employers, through looking at credit reports and that kind of stuff. So income, credit report. Some property managers only pull the number. So it's 600. We pull the full report. I think good property managers, whatever you want to call it, pull the full report because you understand the story of why the credit is what the credit is, right? There's a whole slew of, in my opinion, great renters out there that maybe have lower credit scores, but have enough income to qualify, and understanding that maybe the reason their credit's low is because they have a bunch of medical payments they're late on. There was a car accident. They've been paying them off over time, but they're delinquent. They're late. Personally, if I see someone who has a lower credit score, but they meet all the other boxes, they check all the other boxes, like I almost ignore it if it's due to medical, right? Now, if you're looking at that credit report and it's every credit card they've ever had has been late paid or a charge write-off or whatever that might be, they're behind on their auto loan or they have been recently, that's a different story. But that's why I like to pull the full report, because you can build a better picture of who it is you're actually interviewing to be moving into the property. So full credit report, income qualifications, and then there's the criminal aspect of this. This is becoming more and more tricky, which is actually why it's important, especially if you live out of state from your rental, to use someone who is local and can be your eyes and ears on the ground and understand the local laws and regulations. An example of this is in Seattle proper, like inside the city. So not the metro area of Seattle, but inside Seattle, you can no longer deny someone from moving into your home because they're a felon. Most other states and cities across the country, you can say, you know what, we don't want to rent to felons. In fact, that was a big thing back, 20 years ago. Crime-free lease addendums and part of community policing was having these on there to make sure that we're, working with the community to provide housing and keep that neighborhood safe. A lot of cities are turning away from that and saying, here's new items that you can't discriminate against. And so if you're not local in that market where you're buying your investment home, you may not know some of these things because it might be different where you live. Even if you have 3 or 4 homes, maybe you manage them yourself in that market, you get outside of that, things change. An example, we're kind of on a tangent here, but I think this is an important one. Another example of local regulations is late fees, right? You can get in all sorts of trouble if your lease has a late fee that's too high based on local rules. We have a huge office in Minneapolis, Minnesota, where I live and I'm located today. And everywhere in Minnesota, you can really charge almost anything you want for a late fee, so long as it doesn't violate interest rules and all kind of stuff. But in the city of Minneapolis, it can't exceed, I think, 5% of the rent. I don't remember the exact number, but there's a rule inside the city of Minneapolis for late fees. So we sometimes have to adjust our leases for that. So that stuff can get you in trouble. And that's important as we go back to that leasing and background check phase of what can we look at? What can we deny people for? And that's going to be different depending on what region of the country you're in, or perhaps even down to the specific municipality, right? And so getting an understanding of what they look at, making sure it's wide, a full criminal history, and you can leverage that in most markets where you can. And that's going to be a federal, a state, and a local criminal search to understand the background of the person. There's federal requirements for background checks, things like terrorist watch lists, and other money laundering lists to ensure that we're not helping bad actors launder money and that kind of stuff. So there's requirements at a federal level as well that should be included in that background check. So that's the high level of background checks. There's a lot to it. It sounds really, really simple, but you want to make sure you're meeting the federal requirements, your state requirements, and then now local and city municipality requirements. Once you've gotten through all of that, I think you want to, if you're asking a property manager, or if I'm interviewing someone and they're going to be leasing one of my homes, what's your criteria look like? There's really two basic answers to that. It's what's acceptable from a criminal perspective. And again, that might vary by state. You want to have at least 3 times income to rent ratio. You probably want to have over a 620 credit score in most cases, unless you're in a Section 8 affordable housing situation, then that's going to vary a little bit. But that's kind of an average, I think, that I would look for.
And then what would you want to know in terms of how the property management company handles maintenance issues? What are some things you should be asking about there?
So this one, maintenance is huge, right? This is probably 50% of the work of a property manager. And so again, going back to how we started this conversation around what's your investment style and how much do you want to be involved? Number one question, if you're someone who wants to know everything that's breaking at your house, you understand that you're getting good pricing on this, all these things coming through, do they notify you? Right? There's some property management companies that never will until you get your monthly statement, and it'll show you that, they fixed the kitchen faucet, and it's a surprise to you. I prefer to at least know what's going on, be notified what's happening. With today's systems and platform, we've built a lot of our own technology at Renters Warehouse to be able to do this. Our property owners are always in the know of what's happening. Hey, we've received a maintenance request in your home. Here's what we're doing about it. Oh, remember that maintenance request we told you about 2 days ago? That's been fixed. You're going to see it deducted on your invoice this month. So there's 2 options for maintenance at a very high level. One, a call comes in, they take it, they fix it. You never hear about it until you see your statement monthly. Or 2, you're in the loop, and you either are just in the loop, or maybe you get to have a decision-making process around how it's being handled or whatever that might be. But that's a really big, important question to ask, again, depending on your investing style and how you want to be involved in your property management and specifically your maintenance. Second, go ahead.
Nope, go right ahead.
Secondly, I think we should talk probably more about this one when we get to fees for sure, because is the property manager you're hiring, do they outsource the work to local vendors that are going to go out and handle it, or do they have in-house maintenance techs? There's pros and cons to both. Right? Outsourcing it is an advantage, I think, because there's an advantage of outsourcing is that there's no perceived conflicts between your property manager and the maintenance staff saying, hey, big revenue center for property manager maintenance. We have our in-house techs and we charge a lot of money to do maintenance. One of the downsides to outsourcing is also pricing, because if your property manager is not looking after your best interests and negotiating preferred pricing for having a portfolio of homes that these vendors are working on, you can get crazy out of control pricing. This is a huge issue over the last couple of years since COVID, when we've seen material costs on the rise, hourly rates of service technicians on the rise, and maintenance costs have been the thing across all expenses in investing in real estate that we've seen really go up. It's a controllable cost. And you want to make sure whether your property manager is using their own folks internally to do this, how are they charging for that? Is it transparent? Or if they're outsourcing that, how are they ensuring you're getting the best deal? The kind of sniff test for this, if your property manager outsources, which we outsource most of our work at Renters Warehouse, is if you're the client and you can call up and get that repair done out of a random call from the phone book for cheaper than you got it from your property manager, they're not doing something right? Your work coming from your property manager should be cheaper than what you could find it for if you made a phone call to a plumber out of the phone book, because, if they have your best interest in mind, and if they're running a smart business, they're out talking to those plumbers, electricians, handymen, painters, cleaners, whatever it might be, saying, hey, we've got 100 homes, 200, 500,000 homes in this market that you can have access to, but we need preferred pricing to make sure that our clients are getting the best price out there. So talk about how they price their maintenance. Do they insource it? Do they outsource it? And what kind of markups they might have on it, which we can dive into more when we talk property management contract agreements, because I think that's a really important piece.
Yeah, I'll let you keep going.
All right, great. The other two here, I think we talked a little bit about eviction processing. Really, just the question is, do they handle it? Most property managers do. Some maybe startup property managers or real estate agents who are starting a property management company on the side that haven't done it before. Oftentimes they just outsource it to an attorney. It becomes very expensive. Again, outsourcing versus doing it internally. What are the charges and fees associated with eviction? Important questions to ask, which we covered one of them before, which is how many of your tenants that you're placing in these homes are being evicted. Probably a great question to ask these days is, what's the timeline for an eviction in this market that maybe is new to you, that you've never bought an investment home in before? And then accounting, just what kind of accounting reports are they going to provide you? At a minimum, they should be providing you an accounting ledger on a monthly basis that includes all of your income, all of your expenses, what your distribution was, and then, of course, quarterly, annual reporting as well, how they might help with your taxes or not. Again, depending on what's important to you, the answers to how they answer those questions might be different. But at a bare minimum, you want to make sure you're getting monthly reporting. Beyond that, and even better, is having a real-time live portal that you're able to log into and understand, oh, great, my rent was paid this month, and there's some expenses on there they can see, and you can see real-time what's happening in your property as well. So the next one we talk about really goes hand in hand with those services, which is tenant management and retention. I think far too often in conversations that we have as real estate investors, we're talking about tenants, and we're talking about tenants not paying the rent. We're talking about having to evict tenants. We're having to talk about all the maintenance requests that come from our tenants. And it almost becomes this contentious relationship between property manager and tenant, or investor and tenant. And I think it's really, really important to remember that without tenants, none of us here on this call have a business, right? The tenants are our customers. They are renting our product and buying our product. Even if they're not buying it, they're paying us to be there. And without the tenant, this stuff doesn't work. And if you can maintain a tenant for a long term, profitability of your investment goes up. Your return on investment goes up the longer you have tenants stay. So talking about how your property manager views relationships with their residents is very important. How do they work with to ensure that your tenant's going to hopefully renew the lease if we want them to renew the lease, right? The lease is a two-way contract. So we may not want to renew a lease from a tenant who's been one of those problem tenants, not paying their rent on time, or not taking care of the property, or whatever it might be, not following the lease. When it comes time for that lease to be over, we can give notice, tell them we don't want them back. But in most cases, we want them to stay, because you don't have to turn the home, meaning spend expenses on repainting, cleaning carpets, doing whatever else that happens. Plus you have a month or two of downtime with no rent coming in. I mean, the biggest hit besides that maintenance expense I talked about that's going up like crazy lately, this is the other thing you can control. And so aside from how are you screening residents in the approval process, but how do you communicate with residents? How are you getting back to them? What types of communication channels are available for my tenant to get in contact with you if there's an issue? Is it just phone? Is it just email? Do they have a portal? Those types of things, and understanding, does your property manager have the goal of keeping your tenant long term? Because that's ultimately going to be the goal of you. If you can have someone stay in your home for 5 or 6 years, so long as you're getting rent increases when it comes time for renewal, best case scenario for you, you're going to make more money over the long term. And so understanding tenant communication and retention management, very, very important. Okay, this is a fun one. This is like the most questions I get around property managers and property management is fees, because they're all over the board, especially when you look at the first headline rate, right? Monthly management fee, it's X. or the tenant placement fee, the leasing fee is X. And that's generally where I find people stopping their comparison. And you can't stop there, right? Because what you need to do is take a look at all of the fees that are going to be in the property management agreement. I don't even have them all listed here, but these are the most common. Add them up over the course of a year, and perhaps over the course of a lease. If you think your lease is going to be a couple of years, there's going to be renewal in there, and annualize that. And that's how you want to compare fees of property managers. For instance, you might have a property manager that, leases homes for a flat fee of $500, but their property management monthly fee is 13%, right? That's actually a tough one to understand. Like, am I going to come out ahead? Because you're going to talk to a competitor of theirs that their leasing fee is 100% of the first month's rent and their rate's 8%. And you got to do the math and figure out which one's going to be better over that first year or 2 or 3 years of having your tenant in place. That's the easy stuff to do. What I'm encouraging everyone here watching to do is really, truly read the property management agreements that are coming to you. Because inside of there's going to be some other fees, whether it's the renewal fee for lease renewals. Maintenance fee, I think, is the biggest and most overlooked fee out there for property managers. And look, property managers have to find a way to be competitive with each other. Again, there's 60,000 of us out there across the United States. But we also have to make money. I mean, it is a business after all. And frankly, you want a property manager that's making money so they can hire great people to take care of your home. And so you're often probably doing yourself a disservice if you're going to look simply for the cheapest property management you can find. Because this is one of those things that oftentimes you get what you pay for, right? Within reason. And so some managers will, for headline rates, say we've got this really great low monthly fee, and that attracts a lot of business to them, but their leasing fee is much higher. Maybe it's average, but where they're going to change some things is maybe there's account setup fees. How much does it cost to actually start with them? That's something we don't have listed here, but account setup fees. Are there annual charges to the homeowner or the investor? So, do they charge you a $250 fee every year to prepare your year-end statement and accounting, which, by the way, is out of a click of a button from their property management software, right? But then this maintenance fee. We were talking about maintenance earlier and trying to understand how maintenance really, really works. And are they outsourcing it or insourcing it? But also, are they charging a fee over and above the invoice? Most property managers do. Some still don't. But most do, for coordinating this, handling this, and frankly, trying to find a way to make their business profitable. This is a really low margin business, property management, because it's so competitive. It's been commoditized. And, a usual maintenance fee is going to be 10 to 15% of repair costs. I've seen it as high as 30 written in an agreement. And I think worse yet, I've seen it happening without it being disclosed in an agreement, because it's being done in some kind of backroom channel way, which is why I think it's important to read through the agreement. If it's not mentioned, if there's a maintenance fee not mentioned, this is a question you should ask around, are you making money from maintenance? How do you make money from maintenance? Because oftentimes it's not there. It's because they're making a ton of money off maintenance. They're just doing it in a way that's probably not on the up and up.
Yeah, I think it's really important to read the full agreement and to understand the full compilation of all of the different fees, right? Because somebody might not be used to seeing a fee for, X cost, and they might be like, oh my gosh, that's outrageous. They charge a fee for that. But then maybe they're charging less for something else that you were used to paying more for, right? Or vice versa. They might be charging the lowest fee. We're the only company in this market that charges 6% property management. Everybody else is at 10%. But then you look through the agreement and all of a sudden, the rest of these fees are, double or triple what the other companies are charging. And they, sort of lead with that as a marketing pitch to get people in the door. But then if you read the fine print, of course, they're actually more expensive in some cases. And so it's just important to understand that your out-of-pocket expenses over time for property management is not all going to be concentrated in one specific section, and there's oftentimes going to be divided over different sections, and different management companies structure that in different ways, right? So just read through the whole agreement and just look at the big picture and look at them all together is what I would say. So I think that's really important.
Yeah, I think this next slide here, as we talk about property management agreements specifically, review fees is the number one. And Matt, this is what you were just talking about, but actually taking out an Excel spreadsheet or pen and paper and just kind of highlighting them, understanding what it is, what are all the different things that might come through there. For 17 years, I've tried to build our business on not being a nickel and dime company, because I think that's just annoying as a consumer. Like, oh, okay, you're going to charge me, we're in most of our markets, we're a flat rate. So 119 to 130 bucks a month property management fee. And we have a leasing fee, and we try to have not a ton of other stuff in there. There's an account setup fee in our agreement. It's $99 for new properties coming on board. We have lease renewal fees and those standard fees we had listed on the previous slide, because I just think it's annoying to be nickel and dime. So I've tried to build the business differently. So on the surface, some of our fees look bigger than our competition in some cases, but it's because they're all inclusive, right? Leasing fee is a great example of this. There's a lot of people out there who say, hey, I'm going to rent your house and we'll charge you $500, making up a number, or charge you 25% of 1 month's rent. Oh, wow, that's a really great deal, you might think to yourself. But as you look through the property management agreement, now there's a monthly marketing fee. There's a showing technology fee. There's this fee. There's a commission due to a co-broker that's not coming out of the fee you're paying your property manager. And when you add it all up, it equals what everyone else is charging anyway. And so that's why it's just important to kind of go through there, understand what's there, literally write it down, highlight it, put an Excel spreadsheet so you can get the full picture as you're comparing these. And I wouldn't buy property management on price anyway. I'd buy it on, the level of quality of services they have, check out the reviews of property managers online, talk to other people in the area, work with investor networks like Maverick to understand who does a great job. Because when you probably bring this all together, and if you were to do a sampling of all the property managers in the market you're looking at, review their fees, you're going to come in within 5 or 10% on an annual basis anyway. And so then it's who do you feel most comfortable with, all that kind of stuff.
Well, and I think it also goes back to what you said previously, that the greatest expense is not going to be any of these fees that we just listed. The greatest expense is going to be either A, the wrong tenant gets placed and then you have to evict them,
right?
Or the wrong tenant gets placed and they turn over every single year. Even if you don't have to evict them and they don't default, if you have somebody that's moving out after 12 months and then you have to, fix up the property, then you have to release it, then you have vacancy, then you have a releasing fee, and you have that every single year, even if there's no defaults or evictions, that is a very, very expensive. It's way more expensive than any of these fees that we're talking about. And so if you have a property management company that is able to place really high quality tenants in your place and then give them world-class customer service such that they want to stay in your property as long as possible and not move out, that is worth paying a lot more money for, in my opinion, because your net ROI as a rental property owner in the long term is going to be significantly higher. So I would agree. Oftentimes you definitely get what you pay for in the long run.
Yeah, absolutely. Let's jump to the next slide just for time here a little bit. And these are some things that should be outlined in a property management agreement. So as you're taking our advice here and really reading that, which sounds funny that we keep saying that, but I know I'm guilty of this. I mean, how many agreements do we see as business folks and just people in society these days, right? The amount of agreements we have on our iPhone that you just hit, I agree to, and move on. A long document could be the same thing. But check for these things. Look at those fees. Look at some of those other things. But inside of here should be some parameters around when you're going to get updates and information on collected rent or not, right? And what happens if they're not collecting rent? When are they communicating with you? When are they making decisions to evict? Are they involving you in what that might look like? Are they doing regular inspections of the home? This seems like something that everyone should do. Like, yeah, you're going to do inspections of my home while you have it under property management, but not all managers do, or they charge you for them if they do. So are they included? Are they not? When are they going to happen? And what kind of inspection is it? Maintenance repair updates. We talked a lot about maintenance, but again, in the property management agreement, they should disclose any fees that they're charging on maintenance and repairs over and above the vendor invoice. How are they updating you on these? What is their service levels their SLAs that they're adhering to as far as timeliness of repairing issues that come up. Are they going to notify you of tenant complaints that come up about your home? And then, of course, what are the detailed accounting requirements that they need to send you, as we talked about a little bit ago as well. So off of the property management agreement itself, this could be the first step you look at, but I like to kind of pull it together at the end when I'm down to maybe one or two property managers. Okay, they can do all of the services I want them to do. I understand that they're going to do them professionally and in a way that makes sense to me. And I understand how they're going to collect rent and what they're going to charge me. I've gone through their agreement. Now we got to go and get references and review reputation. And of course, in today's world, this is so easy. Go online and check it out, right? Google's there. The Better Business Bureau is there. Yelp is obviously there, although just as a personal plug, I think Yelp is terrible, but that's just me. And there's others. And then I think one of the best ways to do this is by leveraging your networking groups, right? Whether it's Maverick, your local RIA organization, and ask, who's using these property managers that you're interviewing and looking for. Have they had success with them? Do their tenants stay with them for a long time or whatever that might be? But this is the point you got to get to. And the asterisk I'm going to put on this as a property manager is I would look one level past the star rating you see, right? We have, I think most of our markets across the country are around a 4-star on Google, 4 out of 5. Read the reviews and see who they're coming from, right? Because our world as property managers is super interesting. We want to have a great reputation. We want to please the investor, our client. We also have a resident in the home. So we have, if we're working in the best interest of our client, the investor, the homeowner, in a legal way, it might not be exactly what the tenant wants. Refrigerator breaks, their maintenance request says they want a brand new stainless steel refrigerator, and we're going to repair the one that's in there, right? We'll literally get negative reviews from a resident about that, right? Or frankly, we've had it the other way, where we've had homeowners that say, hey, I want you to go change the locks on my house because my tenant's not paying. Opens everyone up to all sorts of liability and legal issues. We can't do that. We don't do that. We get negative. So, but analyze what they are. A lot of times, if you see negative reviews from residents, and it's not about communication or something that's basic that a company and a service should be able to provide, but it's about they withheld money for my security deposit. I'm upset about it. They didn't give me a new refrigerator. They fixed my old one. Whatever it might be, like as an investor, you're smart enough to kind of read through the lines a little bit and say, that 1-star review, I actually might like that one. Looks like this property manager is looking out for me versus looking out for the resident and maybe just trying to buy off a good review. So it's actually harder than just looking at the review rating, I think, in property management, because you want to see who's leaving the review. Is it a tenant? Is it a property owner? What's the review about? If there's context to that review, and then just, trying to understand like, does that situation make sense or not? Because as you go through property managers, whether it's Renters Warehouse, any one of my national competitors, all the way down to local competitors, they're going to have all sorts of 1-star reviews, but they're going to have a plethora of great 5-star reviews from great service they provide to people as well. So you just got to kind of read through some of the fuzz on that. And this kind of brings it all together. Like we've covered a ton of stuff on a pretty good timeline, but like this is the way you should really go through this, right? Again, go through and understand what property managers are available in this market, especially as an out-of-state property owner. You may not know and have some of the contacts and references, or have already built your team and network there. There's great tools to do this online. Google just property manager Minneapolis, a bunch of them are going to pop up. There's sites specifically dedicated to helping investors find property managers. Better yet, go and get some referrals and recommendations from other investors you might know in that market, or leverage resources like Maverick Investor Group. Check their references, ask those questions we talked about from their processes, their KPIs that we want to be looking at, from rent collection to occupancy to eviction rate, maintenance markup, maybe even, talk about how many of their homes in a given month have maintenance requests. Like, is the maintenance being done in a great way as well? And then go get those references, look at the reviews, and then ultimately make a final decision. But before you sign anything, make sure you read that document, that property management agreement, front to back, understand what's in there. If there's any outs for the property manager, if you have an out, can you cancel any time if you're not satisfied with the service, or whatever that might be? Then sign up and you can begin the onboarding process. So with that, really happy, Matt, that you invited me in to talk to your group today. I think this has been fantastic. For everyone watching here today, and I think we're going to send this out and hopefully get a bunch of other folks that are going to be watching this as well, but anyone inside the Maverick Investor Group network gets this offer for having attended today and seeing this, because we're out there trying to work with like-minded investors, like-minded entrepreneurs like yourself, Matt. So we're giving any one of Maverick Investor Group's clients that sign up with us, try us out, 3 months of free property management services in any of our 40 markets across the country. So you can get there by going to maverickinvestorgroup.com/RW for Renters Warehouse. There's a landing page there. Give us your property information. That's going to get you in touch with someone on our sales team to talk about your property, what market you're in, answer any questions that you have about our services, like a bunch of the questions we just went over this evening. They'll walk you through that, get you in touch with a local contact if you need that, and take you through the whole process. So that's the first step in getting signed up with us. If you're interested in working with Renters Warehouse, check out maverickinvestorgroup.com/RW. Put your property information in there, your contact information in there. We'll send you a free rental price analysis as well. What that is really giving you data on what your home should be renting for, whether you already have a resident in place that rents maybe changed since then, or if this is your first home in a new market or just a new home you've bought that you're going to be renting. We'll give you that free rental price analysis as well with this link here for Maverick Investor Group.
Well, thank you for making that offer, Kevin. At this point, we want to open up the Q&A for folks. For everybody that's on the webinar right now, this is 100% live, and you have access to the founder and CEO of one of the top, best rated, and largest property management companies in the country. So if there's anything you want to know about property management, now is your time to ask that. So go ahead and type it into the chat. And we are just about at the 1 hour mark, but I definitely want to allow folks that did spend the time on this webinar, if you do have any pressing questions, by all means, we definitely want to answer them. And while those are coming in, Kevin, let me ask you a question. You and I have known each other for 17 years. And I remember when you were coming into the industry, and you could have chosen different parts of the real estate industry to go into. You're obviously a real estate investor, and all of that personally. Why did you choose property management? What was it that you saw back in 2007 about the property management industry that needed a disruption and that really drew you into that space? And then over the course of the last 17 years, how has Renters Warehouse differentiated itself in the marketplace of those however many, whatever that huge number of management companies that you said are out there?
Great question. So why did I pick property management? It was because it was a sore spot for me, right? Like any entrepreneur out there, I had some properties I was renting. I actually used to be a corporate pilot. That was my full-time job. I flew corporate jets around the country, and I was buying some homes on the side and managing them myself. And as I got busy and I was flying around, I'd be trying to collect rent on the road. And this was before the iPhone, for sure. I think I had a BlackBerry maybe, but so communication was harder. Collect rent or forget to collect rent, forget to deal with maintenance repair. And I started investigating property management companies, very similar to what we were just talking about today, how to find a good one. And I came to the conclusion that there wasn't really one that fit my needs at that time. I mean, this is 17 years ago. And while that seems like not that long ago, just think of what's happened with technology in the last 17 years. Right, there wasn't really a tech-enabled solution for property management. There wasn't a way to really stay in the know on the go. Property managers at that time were like using paper, right? Excel spreadsheets maybe, and it was just goofy. And I thought, this could use some work. We could apply some new age philosophy to this, maybe some technology, and and just make the relationship between investor and property manager and resident just much more transparent and enjoyable than what it was. And so that's why I got in it. From a business perspective, I also loved the recurring revenue stream that comes from having these monthly revenue sources that come in. So there's all sorts of other reasons, but really what got me thinking about it was the lack of innovation and technology that had been happening in property management. And I went out to, find a group of people we could solve that together with. And we've done a lot of that. And I just had something else I was going to say. I totally forgot to say. So, bringing that, technology forward was a big piece of it, and just improving that relationship. And I remember what it was. If you look at how technology impacts our world as everyday consumers, it's really interesting that it seems like technology makes it to the real estate world last, right? Now, that's a harder statement, I think, for people to believe. Over the last 5-6 years, there's been tremendous technology advancements in real estate, from digital title closings, and Zillow's done amazing things. There's a lot of tech now in real estate. But if you think back 6, 7, 8, 9, certainly 10, 15 years ago, there was tons of technology changing the world, and it wasn't hitting real estate. And by the way, if it did hit real estate, it hit traditional buy-sell real estate for traditional real estate agents buying and selling homes for people. It never really made it down to the property management space, because we're this small subset of real estate, kind of the redhead stepchild of the industry, and it just wasn't there. So we set out to do that. There's been tremendous technology advancements across our sector of the real estate world over the last decade. It's been fun to watch. That's what we've been trying to push forward. And we've just been trying to deliver transparency to all parties involved in this process, and make it easy to invest and create generational wealth for people. And that's my core purpose in life, is to be able to help people leverage real estate, which I think is such a tremendous investment tool, to create long-term wealth and financial freedom for themselves and their families. So that's why I do this today. I think what differentiates us, I said it a couple of times, is just the way we've built technologies, tools, and processes to bring transparency to this business that's generally historically lacked it.
All right. We'll take a couple of questions that are coming in now. If you have any more questions, folks, feel free to type them in. Fred asks, are you in the Louisville, Kentucky market?
We are not yet, unfortunately. But if you go through maverickinvestorgroup.com/RW, you're going to find our map. It's always changing, always updating. So be on the lookout for us, because we like Louisville, but we're not there yet.
Awesome. All right. Next question. Raul asks, does Renters Warehouse provide any kind of rent guarantee or rent gap guarantee? Or if not, do you recommend any type of, what do you recommend for folks?
So we don't. We actually have what we call our, we have a tenant placement warranty, or a tenant warranty on people we place in the home. It's different than a rent guarantee. We're not guaranteeing rent, but what we do guarantee is that if we place a tenant in your home, and for whatever reason they don't work out for the length of the lease, well, it's up to 18 months, but for the vast majority of the lease, we're going to replace them for free. So there's no commission owed. We do this to create alignment between our investors and ourselves, to know that we're putting the best quality people we can in. Every once in a while, you get a lemon, and we're going to share that with you and make sure we're not charging you for the next tenant that goes into the home. And this is a fascinating thing. We do great background checks, but I've had the things I've seen over doing property management for as long as I have. Like, we've seen professional basketball players not pay their rent, even though they got plenty of money, and we've seen people you'd think were law-abiding citizens, like police officers, have to be evicted from homes. So things can fall through the cracks. So we have a warranty on the people we place. We'll replace again for free if it's inside that warranty window. We don't do a rent guarantee at this time, but we don't have one specific partner we work with, but we certainly have some referrals for that. If that's a question folks have as they get in contact with us, we can certainly point them in the right direction.
All right. Leonardo, good to see you on the webinar, my friend. Leonardo asks, are you in the St. Louis, Missouri market?
Leonardo, we are in St. Louis. So we're in St. Louis. We've been in St. Louis for 7 or 8 years. We've got a good presence there. So absolutely, St. Louis.
All right. Yeah, Leonardo, you just go to maverickinvestorgroup.com/RW and fill in your stuff. And then you can have a chat with them about your St. Louis properties for sure. All right. If anybody else has questions, now is the time to drop them in because we are winding up. I want to respect everybody's time and thank everybody for joining us tonight. Once again, if you go to maverickinvestorgroup.com/RW, Kevin is offering all of you 3 free months of property management in any of the markets that they are in. So if you have rental properties, whether you bought them through Maverick or not, and you would like to try out Renters Warehouse, you can at least start with a discussion with an interview. And to be honest, folks, I give this pro tip out all the time about one of the other greatest due diligence hacks where I think a property management can come in to play in a really important way is in your acquisition stage. Right. So if you're looking to acquire properties and you're buying rental properties, having a relationship with a property management company, you can call them up and say, hey, I'm trying to decide between these 2 or 3 properties. If I was to give you any one of these 3 to manage, which one would you be most excited about managing? And do you think might rent the quickest, or you might have the most demand for based on what you're currently seeing in terms of tenant prospects? And they'll give you a very honest answer, right? Because property management companies, they don't have an interest in caring which property you buy, but they'll give you the honest answer about which one's going to have more rental demand, right? So building a relationship with these property management companies and having the initial phone call and doing the initial interview about how they're going to manage your property, but then you can also start asking them questions like that, and they can even help to give you some third-party independent information when you're selecting your properties, that you might want to acquire as well. So I think definitely registering for a phone call, starting to build that relationship is a really, really good thing, especially when you've got a company that's in this many markets and you're trying to diversify across markets. Being able to use the same management company in multiple markets is a really incredible thing and a way to, really consolidate a lot of your bookkeeping and keeping track of what's going on in your properties and everything else. So with that, I want to thank everybody for joining us tonight. And Kevin, thanks so much for being here, man. I really, really appreciate all the information. Thank you.
Thank you. It's always fun. Thanks for the invitation. And I love your pro tip because we tell people the same thing, right? Even if you haven't bought the house yet, give us a call, go through the process. We can help. Any information you want in the acquisition process, confirming rent valuation numbers that might be coming through, talking about the area, talking about evictions, whatever it might be. You don't have to be a paying client to be using us as a resource. That's how we do business as well. So I love that that's a pro tip of yours, and I hope people take you up on it.
All right. Good night, everybody.
Good night.